Hi guys! Today I want to go over everything that happened in my portfolio in December 2024, including my best and my worst stocks, my new buys, and of course all my dividend payments. And because it was the last month of the year, I also had a critical look at my portfolio allocation in general and some stocks specifically. I also have started to make plans for 2025 that I want to share with you. So we got a lot to cover today, let's jump right in. At the beginning of the month, I started with a total portfolio value of 110,607 euros, split between 75.5 thousand in ETFs and 84,000 in stocks. And I was eager to go into the usual year-end rally to come a bit closer to my goal of bringing this portfolio to 1 million euro. Unfortunately, the year-end rally failed to materialize. Maybe because of the general very good performance in the last month. But it also looks like everyone is currently waiting for Trump to become the new US president to see which of the rules, trade tariffs and regulations he promised will be implemented in the first quarters of his government. This led to the S&P 500 being down by minus 2.74%, while the MSCI World was down by minus 3.75% even. And when we look a bit closer to the sector performance in the S&P, the majority of the companies in green are big tech companies again. The rest is basically deep red with a few exceptions. In contrast to the slight general decline, I was actually quite happy with the performance of my portfolio as it was up by around 1% overall. This is the total volume of my portfolio, so it also includes the new buys. When I exclude these new buys, my performance is with positive 0.03%, basically flat. This was mostly due to my individual stocks that were up by almost 2%, driven by just a handful of stocks that went really well. But of course, not all was rosy in my portfolio, and there were also some stocks that didn't perform too well. So let's have a look at my 3 worst and my 3 best performers. The first of my 3 flops last month was JD.com that continued their descent from the October highs with a negative performance of minus 5.5% in December. This could have many reasons. From Trump's China policy, over the news that their competitor Alibaba is planning a joint venture with South Korea's G-Market. But my position is still up by around 27% since I bought them in early summer last year, so I'm actually not worried at all as the numbers still look good. I had a look at the last earnings report in my last portfolio update from beginning of December. So if you want to have some more details on the stock, please feel free to check out this video. My second worst performer was NextEra Energy with minus 6.6%. NEE has been one of my stocks that had quite a poor performance since I bought them. The total performance of the company since I bought them is around 4%, but only because of the dividend payments. The stock price has come down to around the same levels as I bought them, which gives me a price performance of nothing. One of the reasons for this were the rate hikes that had a severe impact on their ability to plan and finance new projects. But my investment thesis in them is still valid. The energy demand in general should increase for the next couple of years due to the demand from AIs and data centers. And while the uncertainty for renewables has increased for the next years, they will still be needed in the long run. Their operations and pipeline still look good, and their nice dividend yield of almost 3% sweetens the wait. But my original thesis was also based on the nice dividend increase with a 10% CAGR over the last 5 years. For the moment they could still keep this, but I will watch very closely what will happen in 2025. Finally, my worst performer in December was the entertainment rate VG with minus 8%. They have paid the dividend in mid-December, and with a dividend yield of almost 6%, this is definitely noticeable in the stock price. And they have updated the lower end of the full year guidance upwards in their last earnings call, if just a little bit, which is actually a good sign. What I find a bit worrying though is that VG was only able to make investments of 700 million in 2024. This is neglectable when compared to their current total investments of 43 billion. Of course, this has also to do with the increased interest rates we had, which impacted REITs especially. So let's see how this develops in the course of the next year. At the moment, the Fed Watch tool indicates what Jerome Powell also said in the last meeting. And that is that at least in the next Fed meeting, the interest rates will stay the same. So the worst performer I had a minus of around 8% in December. But of course I also had some top performers. And the best one in December was actually my worst one in November. It was Energiekontor with 18% in the plus. Their stock did crash by a bit over 16% in November after the Trump election, but it could gain all this and a bit extra in December. I still think that the stock is very cheap at the moment, and this also seems to be what analysts think. There are only 3 analysts that cover the company, but their lowest one-year price target is still more than 120% above the current price. My only regret is that I was not able to purchase any more shares in November. I did a full analysis on them in September, so please feel free to check this out if you're interested in any more details. Next, my second best performer was also one of my top performers in November and currently has a good run after a weak start in 2024. It was the Swedish mid-cap company Surgical Science Sweden. They had a performance of plus 7.5% in December. The company has a good outlook for 2025 right now and expects that their business and especially the sales in the education sector will pick up again. And as I already said a couple of times, I believe that the robotic surgical market, where they are active in, will see a huge increase over the next few years. My last full analysis on them is almost a year old, so I'm thinking about making an update video on them. If this is something you're interested in, please let me know down in the comments. And finally, my third best performer last month was Meta, with plus 5.4%. This is not too huge of an increase, and my guess is that this is the reaction of the market on Mark Zuckerberg's efforts to improve the relationship with Trump. Zuckerberg has visited Trump in Mar-a-Lago and later donated $1 million to Trump's inauguration fund. And if you have followed the news recently, he's even going further now. In the first week of January, Mark appointed Dana White to Meta Sport and the former Republican Joel Kaplan as his new head of global policies. So Zuckerberg is spending over quite a bit to ensure that he is on the good side of Trump. The end of the year is always very busy in my regular job, and between several conferences and many year-end discussions with my customers and team members, there was unfortunately not so much time to take care of my investments. But I did still manage to buy a couple more shares of ASML. This has increased my position in them to 6% of my overall portfolio, and the position is now almost in line with my target allocation. I might still increase my position in them a little bit, but with a lower priority from now on. There were no big changes to the rest of my portfolio. Which brings me to my favorite part of my portfolio tracking: collecting and checking my monthly dividends. And last month I got 4 dividend payments. The first one was from Visa, who paid me a whopping 9.3 euros on December the 3rd. Next, I got a payment from S&P Global of 8.81 euros. Gosh, I wonder what to do with all this money. No, actually I don't. Of course, I will reinvest everything back into stocks and let it grow further. The next payment I received was from Microsoft. They paid their quarterly dividend on 16th of December and I got 14.9 euros from them. Last but not least, I got my biggest payment on 18th of December from NextEra Energy, who paid 27.45 euro. So in total, I got almost 60 euros in December. This brings my overall quarterly dividend income in Q4 to 197.84 euros. As predicted last month, this is a bit lower than what I got in Q4 last year, mostly because I sold my biggest dividend payer from last year. But the long-term trend, since I started my detailed tracking in the beginning of 2023, is still going upwards. I received a total of 806.7 euro dividends in 2023, and in 2024 the payments even surpassed the 1000 euro mark. This is still quite a bit away from financial freedom, but the trend is definitely showing in the right direction. And remember, this is passive income, so it's basically free money and I didn't have to do anything for it. I mean, except for the work and effort it takes to select and analyze the stocks. But because I'm a little strange, that's fun to me and doesn't really feel like work. So all in all, last month was a bit of a quiet month for me when it comes to investing. But over the holidays, I have started to take a critical look at my portfolio and especially the stocks that had a subpar performance in 2024 to see what I can improve. I have not come to a final conclusion yet, but I'm starting to think that there are a couple of companies in my portfolio that I invested in several years ago when I was still focusing more on a high dividend yield instead of the dividend growth. And these companies might not fit too well into my current strategy anymore. These companies are Rio Tinto, DHL, VG, and NextEra Energy. So, in the coming weeks, I will look very critically at each of these companies individually to see if they still fit into my current strategy and if I still believe that they will be a good investment overall. In addition, I also analyze the geographic diversification of my stocks. At the moment, US stocks make up a bit more than 70% of my portfolio. European stocks around 1/4, while I currently only own JD.com from Asia. So Asia is with 4.5% quite a bit underrepresented. I don't want an even split between geographies, and I think it's absolutely okay to be overweight with US stocks. I mean, the MSCI World has even 73% US weight right now. But my goal is still to have a globally diversified portfolio. And the fact is that I currently have only one stock from Asia and none at all from South America. And yes, I am fully aware that most of my companies generate their revenue all over the world. But the same is true for basically all globally operating companies, no matter where their HQ is located. And it is no secret that the valuation of US stocks, especially large caps, is generally speaking much higher compared to other regions right now. This difference has even increased over the course of the last year. The purple line in the graph is the 25-year average, the dark blue bar the valuation by January of last year, and the bright blue line is the current average valuation. And while the average valuation has increased in all regions in the last year, the difference is most noticeable for US stocks. So US stocks are on average more than 25% more expensive than their foreign peers right now. This is nothing that I'm gonna act on immediately, but something that I'll keep in mind for next year. I already have a couple of ideas, but they are still in a very early stage and I'm not ready to share them yet. So there might be some changes to my portfolio in the coming month and I'll definitely keep you updated on all my actions and plans. So if you're not subscribed yet, now might be a good time if you don't want to miss out on these developments. And if you're interested in my top stocks for 2025, you're lucky, because I just made this video about exactly that right before New Year. So please feel free to check it out. That being said, thank you so much for watching the video, guys, and see you in the next one.